There's been a lot of news around things like higher vacancies, lack of demand, and dropping rents in Toronto. But instead of me talking about it, I have Spiro, one of our brokers and our top leasing agent, to share his firsthand experience on how the rental market is doing for freeholds and condos in Toronto. Before we move on, remember to subscribe to our channel and hit the notification bell so you don't miss any other Toronto real estate investing videos from our Elevate team. I think it's better to break the Toronto rental market into condos and houses because they're actually pretty different. Spiro, do you want to talk about how the condo and house rental markets are different?
Yes, I'd love to. I just want to start off by saying I'm very grateful for the past year. It's been really, really busy on our end, especially with leases. And it's been a good sign because our vacancies have been very low. So, a lot of people had ran into very rough times. And I think as real estate investing goes, we're doing very strong and very well. So, yeah, really happy about that. So, condos versus houses. Let's jump into that. They are very different, as you know, not just by appearance, but about preferences. A lot of people have a preference of either do they want a condo or do they want a house? And there's pros and cons of each. So let's start with condo. So the condo key characteristics are it's a little bit of a smaller space. Usually bedrooms are a little smaller, smaller living space. It's a little bit more condensed. But you get great views. You can go pretty high up in some of these buildings downtown, 40, 50 stories high or more. And there's a lot of amenities in and around the building. So a lot of buildings have gyms, which is really important, a pool, maybe party rooms or guest suites that friends could stay in. And the location of these condos are typically in really, really good locations. So right by the Rogers Center, you can catch a Blue Jays game, you can catch whatever you want, any bars, any clubs. Now I know this is where the asterisk comes in because it's COVID, so nobody's going to bars, nobody's going to restaurants,
Yeah,
nobody's
even
going to
gyms are
see the beach,
closed.
even gyms are closed. So that's exactly, that goes exactly into what we've been seeing in the market is that condos are dropping for that main reason is because the whole point of moving into a condo is to enjoy all those amenities, and now you can't. So what's the difference then? Why rent in a home? Well, homes you typically get a little bit more space. There's a little bit more character in the building as well, which a lot of people tend to like. It's a little bit more history. You also get access to a yard in a lot of times, and more residential areas. So there's more space, especially now in COVID, during COVID when we're all locked down. It's nice to just get out there, have your own space, let the dog out for a walk, and really like that. And you tend to see a lot of families geared towards there, living in homes, and a lot more blue collared workers will go into homes. Where you go back to the condos, you see a lot more foreign students, or younger professionals, young couples. So the demographics are different between the two as well.
So now that we've established that the condo and house markets are pretty different, how has the rental pool and the rental demand changed in the last year because of COVID?
So the demand has definitely changed, and I think largely the most change that we've seen has been in the condo market, and it has to do with a few different things. So one, let's start with the blue collar jobs. Blue collar jobs are still going. They're frontline workers. That's you've heard it on the news. You've heard the buzzword all the time. Frontline workers have continued to work, and we're all lucky for that. And they're also lucky too because they're getting paid more, so they still
Yeah.
have the money, the demand's still there, and they're still renting these homes, be it a
Yeah.
3 bedroom home, a bungalow, a single family home, or maybe it's just a unit in a home. They're still going strong. Now what we've seen is that office workers, or white collar workers, now don't have to go to the office as much, and they're not going to their downtown locations or Bay Street or anywhere like that. So they have the luxury now of wanting to work from home, wanting to increase their living space, and get out of their little condo location, which they don't really need anymore. They don't need to be a 5 minute walk or a quick
Yeah.
bus ride, away from work. It's been a year now, and it looks like it might be another 6 months to a year before they will be going back in person. So that's the big difference that you see. Another one is international students. Now they don't have to go in class anymore, so they've gone back home. they're doing classes online. Maybe they've even downsized if they stayed. So there is a lot there as well with all the international students leaving. Families, again, with the blue collar workers, they still need a place to live. So it's not like now they're just magically disappearing. They're still here and they still need a place to live. And that's why the rental market for single family or multifamily residential homes is still going pretty strong.
Yeah. So basically, the bottom line is the people who have decided to move out tend to be the students and office workers that are primarily in condos, and that's why the condo vacancies have been much higher. Whereas the blue collar workers, families who rent the houses, nothing much has changed. So the vacancies haven't really been affected in the house market. And there's actually a report that recently got released by Urbanization, and they said that the vacancies in the condo market went from 1.1% in Q4 of 2019 to 5.7%. Huge jump in Q4 2020. But this is primarily in the condo market, and on the freehold side, it's not like this.
And it's exactly what we just discussed. It's there are big factors, and what tends to happen is the media news and a lot of reports you read actually combine the two together. So they say the rental market, where there's distinct differences in the rental market that we have to really be cautious and aware of, and so not to get too caught up in those buzzwords for sure.
Okay, so now that we talked about vacancies, let's talk about rents, like the rent prices. How has that changed in the rental market across the board?
Yeah, so personally, what I've noticed is, and mainly the most of the leases that we do here at Elevate and that I've closed in the past year are single family homes or multifamily homes, residential homes. Not as many in apartments and condos, and that's mainly due to the fact that most of our clients own single family or multifamily investments. But what I've seen there is typically anywhere between 9 to 11% drop in rental prices from the previous high of last year, or I guess now it would be, a year and a half, 2 years ago. Once we saw that previous high, it's around 10%, I would say, lower now. In the condo market, that is much higher at around 18%. So those condos are really getting hit hard because of those more factors. It's not just that there are people losing jobs, it's people that don't need to live there anymore. So they're just leaving. There's no amenities anymore. So they're leaving. So there's more of a pressure for condo prices to drop as people move away from the city center and more to the suburbs or other residential neighborhoods there. One thing we have been finding, and in some of the condo units that we manage, is that our tenants have been coming to us and saying, "Hey, currently my rent is, let's say, 2,500, but in the same condo, now units are renting for 2,000." So they don't want to move. They like the place. They like us as property managers, but it's at the end of the day, it's a pretty big difference. So they come
Hmm.
to us with that, and they bring it up and say, hey, we're willing to stay, but is there anything that could be done there? And yeah, we've been adjusting our prices and on a case by case basis, which is okay. We're keeping really good tenants in the place, but you're seeing that downward pressure on prices, and especially in the condo market. Now in the multifamily market, or the single family home market, you haven't seen that as much. And when it has been done, it's been for a fraction of that price. So it hasn't been a 500 dramatic drop, a $500 dramatic drop. It's been closer to maybe $100 here and there, depending on the unit, depending on what the actual market could get. So that's a really big example there on the difference between the two markets for sure. Now the condo market, with the prices dropping and people moving out, has put a downward pressure on the multifamily, residential, single family market. So people are moving from there. Now the argument is, well, if there's a one bedroom in a multifamily home going for, let's say, $1,800, and there's a condo you can get for going for, $1,700, like this, a similar condo, similar unit, well, what's the case for the multifamily home now, right? So people would maybe prefer the newer condo and having that nice balcony and being close to one day going to a bar again. That's where the benefit kind of goes to the condos. So it puts that downward pressure on the multifamily homes. And that's why you are seeing prices still drop a bit in the multifamily homes, but not as much as the condos.
So unfortunately, COVID cases are still high right now. We're towards the end of January. It's not easy being in leasing full time for you. For those investors who are watching who actually do leasing on their own, can you share with them on what things they should keep in mind if they're leasing their properties during this difficult situation?
Yeah, for sure. I think the main focus here is to focus on your safety, not only your safety, but your tenant's safety and potential tenants' safety. So you really want to make sure that you're following all the precautions. Make sure that everybody agrees to wear a mask. Make sure that you ask everybody if they've been in contact with anybody, if they're in quarantine. Make sure that this is all written in an email or text. You could even call them, but I like to have everything written down just so that you have proof that you've done as much as you humanly could have possible.
Yeah.
So just to make sure that everybody is super safe, because that's our priority and that should be yours as well. Now, a tip that we have started doing, and again, this is all with safety in mind, is only showing vacant units. So only have people come and view the unit in person when the unit is vacant, so that it minimizes the risk. We're walking into homes, people live there, they have their kids there, and you don't know where they've been, they don't know where you've been, and the chance of something spreading is a lot higher in those instances. So showing vacant units is great. There are pros and cons, and the cons being that you might have a few weeks to a month period there of a vacancy that you might have to bite the bullet on. But safety is our greatest concern for sure. So that being said, always remain safe and cautious. Another you could get creative ways to lease as well. I think that's the big part of it. When problems arise, it's always creativity and people coming up with different solutions to problems. That's how we are as humans. So in this case, using video tours and taking a walkthrough of your unit, posting it on Instagram, on social media, anywhere, YouTube, Facebook. That's where a lot of people are going to these days. So it's really nice for them to have a video walkthrough before they actually have to go physically in person to see the place. Another thing that we've been doing too is, with the consent of our current tenants, asking them to show the unit on our behalf. So still go through the whole process of listing the property and getting back to leads and communicating with them, asking them all the questions, safety questions, the protocol, and then scheduling a time with them that works with your tenants to show the property on your behalf. This just allows you to stay away from it so that you're not spreading anything that you may have come in contact with, and taking you out of the situation altogether. So it
Yeah. So
keeps
it's
you
just
safe.
reducing the number of people in an enclosed small space.
Exactly. So that has worked as well, but you have to get the consent of your tenants to do
Yes.
that. So if
Mhm.
they're willing to, that's a great solution there as well.
Landlords, you talk to a lot of landlords, obviously. What are the most popular questions that you get from landlords because of what's been happening?
The main question I get is my price going to go down? Am I going to be making less than I was before? The quick answer is yes, to an extent. From the previous 2-year highs that we've seen, the 10% drop, as we just discussed, it will drop 10%, but you're still cash flow positive for the most part. I believe most of our landlords are cash flow positive, if not all, depending on what unit they have. And that's a really good sign. So it will still be leased fairly quickly, and you're still going to get good rents. Actually goes right into the next question I get. Is it going to take much longer for my unit to be leased? And the answer is not necessarily. It will take a little bit longer, but that doesn't mean it's going to take long. So personally, my own stats for the last year, pre-COVID, so before there was any cases, before we went into lockdown, the average time it would take me to complete a lease was 11 and a half days. So 11 and a half days is super fast. We typically tell our clients 21 days is the rough outline, because, give or take, averages to 11 days. After COVID, so all the leases I completed after lockdown, our first initial lockdown, the average amount of days is 16.7. So it has gone up, but that's still a very low amount of time that it takes to lease a unit. So there's nothing to be too concerned about there when we're still crushing out leases at a very high clip.
Keep in mind, like when Spiro was talking about being cash flow positive and these leasing times, it's primarily for freeholds because that's our main market. And this would be a lot different when we're talking about condos.
100%. And so previously we typically said 21 days for a leasing period. Now we've gone with the number 28 days. It gives just a little bit more time to the landlords just to feel comfortable with it, but we're still actually on average going less than 21 days for leases. So really good signs. And another question, and I think this is the last main question I usually get from landlords is, are people going to stop paying? Are people going to just move out? Am I going to, is the tenant quality much lower now? And what we found in the single family, multifamily unit homes is that actually, no, they've been very, very good. People have been paying on time. Vacancies are very low, if not non-existent in our portfolio. I believe the only vacancies we may have is because we only show vacant units at the moment, at the time of this video. So those are forced vacancies because of safety concerns. They're not because of bad tenants. They're not because of the circumstances. It's just to remain safe. So that being said, we haven't personally seen any higher delinquencies. Maybe there's a few, and maybe there are a few late payments here and there because of people's working situation, but people are still on the masses, paying on time, paying their share, and are really good tenants.
Yeah. I mean, I think it all comes down to due diligence when we lease out a property. And that's like, kudos to you for doing a really good job with filtering out the good and bad seeds, I guess. And yeah, we do have very good tenants that are responsible. They have stable jobs, and that's why they're still able to make their rent payments every month. So final question over here. What are your thoughts on where rents will go from here?
Oh, that's the $1 million question.
Yeah.
If I had the exact answer, I would be a billionaire right now, and so would all of us. The fact is, no one could actually pinpoint the exact number of where anything is going right now. These circumstances have never happened in our lifetime, and hopefully will never happen again. But that being said, with interest rates remaining low and being projected to remain low for the foreseeable future, for 2, 3, 4, even maybe longer years down the road, staying so low, it's a really good sign to show that our economy is going to be stimulated. So house prices are going to remain high, they're going to remain strong, and it does mean that lease prices should, in theory, remain high. Now, is a downward pressure because of COVID, people losing their jobs, et cetera, all the shutdowns. So it kind of puts a downward pressure so that the rental prices don't go as high as they probably should be right now. But I think they both counteract so that rental prices are remaining strong. So as I could say right now, there is no red flags that everything's going to drop. Everything looks very strong. Units are being leased out very quickly and at very reasonable prices. And there's a good amount of leads that I'm getting for pretty much across the board at all our properties that are priced accurately and priced to be leased. Those properties are getting good leads, good turnouts, and people are applying. So I'm pretty confident that things are going to remain good for the future.
So that's it. Thanks, Spiro, for joining me for this video. And for those of you who are watching, hopefully this addresses most of your key rental questions for the Toronto market. And if you have more questions, feel free to comment them in the comments below, and we'd be happy to respond to them as well. And when you're ready to buy an investment property, we're also ready to chat as well. So I'll put a link on how to reach us in the description below. Finally, if you like this video, remember to give us a thumbs up and share it with your friends on social media and tag us at Elevate Realty CA. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video.